Welcome to the Coronavirus Freight Market Update for April 16th, 2020. I'm Kevin Hill, joined here by Michael Vincent.
Welcome.
As always. And we have an exciting show for you today. We have a lot of updates for you on the freight markets and news. Basically, we'll kick it off here in a second with our news headlines from Andrew Cox, our senior research analyst. And our director of freight market intelligence, Zach Strickland, will be talking about the freight markets. Our head economist, Anthony Smith, will go into the jobless claims and stimulus checks. And then we have Ken Sherman, the president of IntelliTrans, joining us via Skype later on to talk about what he's seeing in the breakbulk type of markets. And
then they're far upstream.
Yes. And then we have our editor-at-large here at FreightWaves, John Kingston, to talk about the PPP and the small business loans. But let's kick it off and do by the numbers.
And always, it's an interactive show, right?
It is
so
an
they
interactive
can ask questions on where they at?
LinkedIn.
FreightWaves, LinkedIn, YouTube, and Facebook, right?
Exactly
so ask your questions, send in your comments, and we'll try and get those answered for you and accordingly. Right? So
accordingly, yes.
But you were saying by the numbers, right?
By the numbers. Where do we stand today?
Okay, so by the numbers, let's see. On today is Thursday, right? So on Tuesday, when we covered this, the count was at 587,815 cases. We are now at 644,188. Deaths in the U.S. were at 23,654. We are now at 28,572. When we started this on March 17th, Kevin, we were at 6,300 cases and 110 deaths. So we've come a long, grim way, actually. And so today, according to the IHME, Institute for Health and Evaluation at the University of Washington, we're 3 days since what they thought was going to be the peak, right? And that was projected to be about 2,100 deaths, right? And so we are now at 2 straight days at 2,407 and then 2,482. And that's so we had a couple days where deaths were coming down, and now we've had 2 upticks.
Yeah, I think on Tuesday we
were coming off a 2-3 day,
and we're hoping that it was going to be a firm peak, I suppose. But it doesn't seem like we have.
No, so
we haven't hit enough to call it yet.
Yeah, the curve's kind of come down, but it's kind of fluctuating there, right? So it's not continuing to go down. We've had a couple upticks in deaths as well as new cases. So those dropped 3 straight days, if you remember, on Tuesday. But then yesterday it spiked 30,000.
Yes.
Which was
unfortunate.
Yeah, definitely unfortunate, and kind of it hurts the psyche a little bit, right? When you wake up and you're looking at the numbers and you're reading these things and you see that we've flattened and you're seeing the numbers evidence, and then you see a couple uptakes, it's kind of like that. It's like a punch in the gut type of thing.
It is. It really is. So we still have. It just proves that we still have quite a ways to go. How long? Who knows? But we'll keep you in tune with all the news. As we go through this. And speaking of news, we have Andrew Cox over here going to go through the headlines. We're going to start off with kind of who's on the roster, especially in the transportation world, for the Great American Economic Revival Industry Groups. That's a mouthful.
It definitely is.
What do we have, Andrew?
Kevin, you're right. It is a mouthful. President Trump announced that he's going to be laying out his plan to reopen the economy in the coming days. This is one of the first steps. The White House announced a swath of big industry groupings, 17 in total, ranging from agriculture and energy and defense to even sports and entertainment. But one of those groupings is transportation. And there was a bunch of notable people that were added to that group that are going to help the president and his administration look into what the reopening of the economy would look like. Included in those groupings, we have FedEx, United Airlines, UPS, JB Hunt, YRC Worldwide, Uber, DHL, LDJ Global Logistics, and the ATA.
Nice. So, what do we have insights on exactly what they're working on, or it's the recovery plan? I found it interesting that I think it said, Andrew, that the primary goal is to come out of this with an independent and self-sufficient nation. Do we have any insight into actually what these guys are going to be working on, or is there any information on that?
No, unfortunately, right now that just seems to be the political jargon that they've attached to their White House press or their White House briefing. We don't have much information on what these groups will actually be doing. Will they be spending time on Skype calls back and forth? We don't know yet. We're expecting more of that information to come in the coming days, especially as media has now started to release that Trump is planning to come out publicly with a plan to reopen the government either today or by the end of the week.
Yeah. Interesting, because, as we talk to different shippers and go through this, the talk is definitely that there was some diversification of supply chains, et cetera. And you would think that there, at least some of these groups, like, you've got your YRC and Crowley Maritime and so on, looking at these different things, that some of it is going to definitely be looking at the robustness and diversification of the supply chain, so that issues like this, don't affect us quite as bad.
Sure, I think that's especially important for the pharmaceutical and medical supply chains. I think people have realized very quickly in this pandemic that we've, in a stress for efficiency and lean supply chains, we've actually left ourselves exposed to not have the resources that we need when we need them. So I do think that people will look into more redundancy and backup plans in their supply chains moving forward.
Excellent, thank you.
It's great. Gary Marks, Vice President of Sales at Universal Transportation, has a good question that we'll be tackling later on in the show. Gary, is opinion on crude oil futures. We have John Kingston coming on, who is the crude oil guru around here, and also a question for you from Han Lamana, who's a logistics account executive at Binning. Michael, what do you predict for the next 2 weeks regarding business?
It's going to be slow. We're in the trough. How far down it goes, we don't know. But watching the numbers on a daily basis through SONAR, looking at the real-time data that we have on the freight markets, there are opportunities out there as it fragments, we've talked about that before. But overall, we're definitely in the trough. How much further down it goes, we really don't know. There is some. The steepness to the decline is changing. It's getting a little bit more gradual, but it's still definitely dropping in the high 8,000s. So.
And Chris Ulrich from 5K Logistics says, "Nice sport coat, guys." Nice sport coat.
Started a trend.
I know, right? And he asked, "Does Dooner have one on?" I don't know. Dooner is in his apartment, so we'll have to see. So, what's our next headline?
Sure. The next headline is a report that John Kingston wrote this morning about FedEx furloughing some of its employees. They didn't give an exact number on how many employees they were furloughing. They just said they were from the last mile division, the LTL division that they are cutting from. FedEx has about 50,000 employees as of their 10K in 2019 in this division. Again, they didn't say how many they were letting go or how long they would be let go for, but they did furlough some people in that division.
Yeah, and in that statement, I found it interesting and quite that the employees furloughed would still receive health benefits for 4 months.
Yes, I think FedEx has done this the right way. They've furloughed rather than completely laid off these people, which allows them to keep their benefits for a few months. It looks to be 4 months, while they can also get benefits from the CARES Act. So they are able to get the unemployment benefits from the government while also keeping their health insurance from their employer. This is kind of a best situation for those people.
I think you're seeing that a lot with the furloughed workers right now as the health benefits continue. Let's round it off, Andrew, with a look at the ports and import volumes there over the last, 30 days?
Yeah, so Kim Link-Wells reported that almost all of the nation's biggest ports saw a decline in import volumes during March. Some of the drops were quite staggering. If you look at total container volumes in March, we're down approximately 21% in general over across the entire U.S. for the month of March, and that brings the year to date, basically the first quarter of 2020 over the first quarter of 2019, to a drop of about 15%. So freight volumes from the coast, from the ports, the import volumes are down significantly, even though we have seen a slight uptick in volumes coming from China in our customs data and SONAR, but overall port volumes are still way below where we would expect them to be if we weren't in an international crisis.
Yeah, they do remain low, and I find it interesting. The March numbers, we see these numbers for March were extremely low, but I watch these numbers quite a bit. Exports from around the world, and then imports in the United States to see what markets they're going to, because you can start to look and see and predict and look at where opportunities and volumes and truckload and so on and so forth are happening in the United States. And it's interesting to watch because the China to U.S. is been up since March 1st. About 260% since March. So the trend has been up. It's certainly not at the levels that it was before, but the trend is up. China to U.S. and also weekly U.S. imports up 34%, and at 267,943, and the year average was at 308,000. So getting back up there, but. Andrew, that doesn't mean that all is good and manufacturing is going, right? Because we're still shut down here in the United States. So I guess this uptick is e-commerce?
Yeah, I mean, the truth is that the manufacturing is back online in China for the most part. Something in the magnitude of 90 to 95% are back up online, but the demand is not there from the U.S. side. Our manufacturing is still closed. Many of our factories are completely shut down. And even beyond the manufacturing, the consumer side of things that would be coming in and imports, the consumer spending is way down. People are out of jobs. So the idea is that imports may be coming in now. They may be upticking now, but I can see those just being put straight into warehousing and awaiting the COVID crisis to get over and out of here in the next couple months.
Yeah, so it's some e-commerce and some buying that's happening right now, but restocking of those warehouses that we saw those warehousing levels drop dramatically throughout March, right?
Yes, you're still seeing a lot of those inventories still trying to be rebuilt from that panic buying that began at the end of February through the middle of March. People might stock up again, but right now, the reason that consumer spending is even down further from where it was in the middle of March is because people haven't felt the need to stockpile again. They're buying at normal levels in grocery stores. So yes, any of this would just be from e-commerce. But as we've talked about in other coronavirus market updates, Amazon and other of the major online retailers are not giving their normal shipping time. So where you would get something in 2 days or a week, it's taking something, taking weeks or a month. So that's deterring some people from even buying things on e-commerce. So again, e-commerce is going to be down for the next couple months as well.
Gotcha.
Thank you very much, Andrew, for sharing the news today. And we will get Zach Strickland, our Director of Freight Market Intelligence, up here in just a second. I have a question for you, or actually, Lauren Rothstein has a question here. As a new agent, I am looking for suggestions to get set up as a carrier with 3PLs and brokers. Thoughts?
It's going to be difficult right now.
It is. It's a difficult freight market, as probably Zach will point out in just a second.
It really is. I mean, if you've got the wherewithal right now, is laying that groundwork, as you've talked about on Put That Coffee Down through sales. Right now is establishing those relationships with those people. I know out there that there are brokers and there are larger companies that are looking for more stable and better partners and those that stand through this. So if you've got some type of value add to your company and establish those relationships now, they're going to need those later. Right?
Yeah, you're going to have a lot of persistence and a lot of facing adversity, getting a lot of no's, and just battle through that right now because it is a tough market. And we have Zach Strickland up right now, and I have a viewer question here for Zach to start us off with, and it's from Ruby Bertholet at Ultimate Transportation, and she says that trucking rates are an all-time low. Any thoughts when we will level out?
Yeah, so we should be approaching the bottom at some point simply because there's just not much further that we can go. We're looking at our outbound tender rejection index starting to show signs of flattening out, but again, it can only go all the way to zero. We're sitting at about 4.19%. So theoretically, we can go a good bit lower in terms of rates. And it's really going to be up to how desperate are carriers going to get in terms of dropping below their operating cost levels. And I think that there's a level of desperation there that we'll have to hit. And I don't think that we're there quite yet. But, the longer that the economy stays shut down, the faster that approaches.
So the carriers with those that have the coffers to be able to go through there and lose money and gain share right now are really the strongest bets.
Yeah, those with Those with lower overhead costs obviously are going to have an advantage as well. They're going to be able to, they just won't have the opportunities that those larger carriers will have going into May or so.
Gotcha.
Very good. So Zach, where do we go from here? I mean, basically, we have another question kind of along those same lines is, how long is it going to take for everything to get back on track? And I know that's a hard question to answer, but can you kind of detail what you need to see to basically leading indicators for what you'll see as we get back on track? I guess that's the best way to ask that.
Yeah, I mean, this was a demand-driven event. So looking at tender volumes, something we track here every day, is going to give us a sign, early warning signs of when things are going to start to pick back up again. We haven't seen any of that just yet. We had this weird kind of anomaly with the Easter holiday where we thought things were leveling out and flattening, but it looks like that was more about, shippers kind of getting in front of the holiday a little bit, the ones that were at least in operation. I don't think we'll really see anything significant until the economies start opening back up with any significance. I mean, a lot of the states are going to have to turn back on. We're going to have to see some governmental activity first before we really start to look for anything on the rise. And when that does happen, as Mike said, it's probably going to open up in pieces. You're not going to see everything just turn on all at once. You're going to see certain markets start to pick up here and there, but it won't be a dramatic rise all at once.
So Zach, we're going to get some clues over the next coming weeks. So basically J.B. Hunt announced earnings. They always kick off earnings season for transportation. So we're going to get some clues on certainly what the last, say the March, the last month in the first quarter looked like. What are your expectations for that?
Yeah, well, J.B. Hunt was a pretty good indicator of what we're looking for from the first quarter from a lot of different segments of the industry. They obviously have a huge brokerage presence, dedicated intermodal. They're half of their business is intermodal, but also only 5% of their business is the for-hire trucking market. But all of those individual sectors saw increases in revenue and increase in volume year over year, quarter to quarter. So, it's not necessarily that, we're going to see dramatic drops in first quarter numbers from these carriers, just because we did get a huge increase on the consumer product side, a lot of food and beverage activity. Also, it was 2.5 months of business as usual before the coronavirus really ticked down. What is interesting, though, is the fact that the brokerage segment margins compressed roughly 700 basis points quarter over quarter. So that means that carrier costs have become a lot more concerning, even with that small little sample size in March that we had. So J.B. Hunt, large carrier, large brokerage, not able to really mitigate a lot of the cost factors that have increased over the last month or so.
So, Zach, just to follow up on that. So yesterday on Freightonomics, you and Anthony, you were talking about the Cass report, right? And the press, I guess they were the rates January, February, and March. And so I can kind of contend, and I think you agree, that, the panic buying, the high surge actually helped that rating to not be as bad as it possibly could be, right? We're seeing kind of the same thing right here that, this is what J.B. Hunt is basically, what they're saying is, the March numbers were large, but now we're getting into that trough, and now we'll see what is actually going to happen and how bad this can get.
Yeah, I think one of the things that we're not able to really truly visualize here is the fact that J.B. Hunt, whereas they have exposure to a large amount of shippers and industries, we can't tell, which individual pieces, did what. But I think the rising costs are actually a symptom of the fact that you had a lot of imbalance in their networks. Mm-hmm. They can go into these consumer-heavy markets, but they can't get out. So I think that's what we're seeing right there is kind of a large, but also on the brokerage side, of course, is just simply the fact that rates were increasing so fast. They couldn't cover them, with any sense of stability in the market. And so that's going to compress their margins a good bit. And then it's going to come right back down, which should help alleviate some of that pressure as well, as they're able to cover more loads more efficiently.
Gotcha. So, that rising cost is indicative of what you've been talking about, throughout this and when we talk about the fragmenting markets is you're going into these markets that you normally wouldn't be, and even if they are those that you are, you're going in with products, but those products and manufacturing that would be there for your backhaul to keep your lanes balanced isn't there, and so we're going to see that same type of thing as we eventually get out of this and we start coming back to work. Hopefully, this plan that is unveiled, I think today, is going to work and be, God willing, expeditious.
Yeah, no, I agree. I mean, they've got to figure out a way to get those backhauls back up and running. Otherwise, I mean, carriers can't afford to drive 500 miles to their next load.
Right. Yep. Deadhead miles get you.
Yep.
Yeah, they do. They will always get you, won't they? Definitely. So Zach, what are you expecting for, the rest of Q2 earnings?
I think that, we'll see similar patterns. Really what I'm waiting on is somebody like a Heartland, a real, kind of industry leader in terms of keeping their costs down and efficient. I want to see what they look like as kind of that benchmark for a for-hire carrier, but I also want to look at a Werner, who is kind of the consummate carrier sitting out there just before I make any dramatic conclusions. I mean, like I said, intermodal, J.B. Hunt is very intermodal heavy, very dedicated heavy. About 75% of their business is in both of those segments, which is not necessarily applicable to the rest of the industry. So I kind of expect a more bearish outlook from a few of those carriers versus J.B. Hunt.
This sounds good. Thanks for your time today, Zach. Always great insights on the freight market and trucking data. And we'll see what earnings season brings to us over the coming weeks.
Yep.
Right, Vincent?
Absolutely. Thank you, Zach.
And next up, we'll have our lead economist, Anthony Smith, join us. This morning, we had jobless claims, which has been a huge number over the last 3 weeks. What were they today, Anthony?
Yeah, Kevin. So we had a refresher for jobless claims that come out every Thursday morning. The latest number was somewhere around 5.2 million. So in a sense, we can look at this as like, okay, the number has come down some. Maybe there's some improvement, but really these are initial jobless claims. So when we're looking at this, we have to add it to the total over the last few weeks. And when we look at the last 4 weeks, that's over 20 million Americans that have filed for unemployment benefits over the last 4 weeks.
So the latest numbers of 5.2 million are it's a slight downtick, right? But it doesn't mean that people are going back to work.
Exactly. It's a downtick, but when we look at this, these are initial claims, and you have to add it all together. So just as you said, over the last 4 weeks, over 20 million, I think somewhere around 22 million is the estimate right now. And so that's a substantial number. That's going to have implications for, of course, consumer spending on goods and services. And of course, that's going to trickle down to freight. But really, it's getting to the point where it already is at the point for million Americans of where am I going to go for my next meal, or how am I going to pay rent and afford the necessities. And luckily, we've had some stimulus checks hit for many Americans throughout the country.
Yeah. So what are kind of some of your takeaways from the panic buying and spending?
What was that? I'm sorry, I missed that question.
So in other words, so we've got 22 million people that have entered the jobless, I suppose, over the past few weeks, 5.2 million. Are there winners in this? Are there companies that are going to come out stronger out of this panic buying and what we're going through in this trough?
Definitely. I think, of course, the winners are going to be the big dogs. We're looking at Amazon, Walmart, Costco, Target, those that are able to withstand a storm or an event like this. I mean, small, mid-sized businesses, regional mom and pop places on a state-by-state or city-to-city, a county-to-county level, they're going to get hit hard, and they are getting hit hard. Many of them are going to have to close their doors. They are not built to go a week, 2 weeks, maybe a month without any kind of capital coming in. And it's been very difficult for them many of them to secure those SBA loans. And so those regional, small and mid-sized companies are going to really struggle. And that kind of competition is really going to start to alleviate any kind of pressure for a lot of the bigger, larger, more substantial businesses throughout the country. The other thing is, for some of the big players, it's going to be a hard hit for them because in the latest retail sales number, of course, we saw a month-to-month and a year-over-year decline. But when we look at segment to segment, it wasn't even across the board. For one, department stores, they were already struggling, really kind of trying to adapt to the e-commerce world. But when we look at the latest numbers for the U.S. Census Bureau put out for retail sales, we saw that department store retail sales were down well over 20%. And so when we're looking at Macy's, Sears, JCPenney, I think these are going to be some of the retailers that were struggling before the coronavirus pandemic, and they're going to be on really, really shaky ground trying to navigate if they can't successfully adapt to any kind of e-commerce field or really kind of maneuver correctly after this. This is really going to kind of change the landscape, so to speak, for many consumers and retail doors.
Yeah. So, is this kind of a lesson to some of those companies that were, like you mentioned, those that were struggling to deal with and catch up, I guess, with e-commerce and kind of change with the times, and now they're the ones that are going to struggle the most. Is this kind of a lesson to, you can't be complacent, and when things are changing and you see that trend, you got to jump on board, otherwise you're left behind? I mean, I don't know who said it, but even if you're on the right path, you'll get run over by a train if you're just sitting there still, right?
I mean, yes, so to speak. I think when we're looking at these large retailers, the big thing with anyone in any business, adaptation is not a choice. You don't have to change, but the world is going to change around you. And so when we look at things like this is going to be meaningful for those that are on the business side and those that are consumers. I mean, we're going to see a change in landscape for those, as you mentioned, are going to be able to have to now either adapt to the e-commerce world or the way things are going to be now, or fall by the wayside. And that's also going to go for many consumers, I think, now when they weren't properly prepared for a situation like this, not having the right amount of savings, not having adequate backup plans, or really different segments where they could really maneuver and really be prepared in the long term. So I think this is going to change the behavior for not only businesses, but for people as well in the long term.
Anthony, what do you think on the stimulus checks, once those hit, what do you think their effects are going to be on freight volumes or freight activity out there?
Sure. So I think with stimulus checks, it's like many things when you look at economics, it depends. So when we're looking at freight volumes, I don't think it's going to have too much of an overt impact. But when we're looking at what I think it's looking to be intended for, is to stop the bleeding for many Americans. And so we're looking at stimulus checks hitting now. I think the big takeaway is that it's here, it's being very helpful for many Americans, especially those with children. You get an additional, I think, $500 per child, I believe. It's really big for those that were really, really struggling initially. I think the biggest thing is going to be the unemployment benefits bump. That's going to give an additional, I think it's $600 per check. That's going to increase a little bit of stability for some Americans. So I think when we look at the stimulus check, I don't think it's going to really increase too many freight volumes. I think because we have such an overt surge in jobless claims, that's going to take away a lot of the purchasing power and the discretionary spending for many Americans. And that, and again, is going to take away from a lot of discretionary spending and freight volumes. And so when we're looking at that, it's all going to tie together, and not going to be too much of a benefit when we're looking at spending for retail and many consumers throughout the country.
Mm-hmm. Yeah, Les Willis on Facebook posts 22 million claims over the last, I think, 3 weeks, or maybe that's 4 weeks now. That's 15% of the total workforce. Is that about what you have?
Yeah, I mean that sounds about right, and it's horrific when you look at the numbers, and really one of the things Zach Strickland, he mentioned, one of the few things that we actually agreed on is when you see these subtle shakes in the economy, that sometimes you see a sudden rise. But again, this is a lot of times on regional pinpointed areas when there's a natural disaster, right? So while you can focus efforts in on a certain region or a certain state for those relief efforts, this is going to be difficult because everything's going to be on a state-by-state basis. So when we're looking at reopening the economy, it's going to have to also be on a state-by-state, condition-by-condition, segment-by-segment basis as well.
Thank you very much for your great insights, Anthony Smith. Always a pleasure when you're on the show. Take care and have a great day. And we'll move on to...
Yeah. Excellent. Oh, we got Ken Sherman.
We do have Ken Sherman.
Yeah, Ken Sherman, president of IntelliTrans.
Yes,
Is
and
he
I
coming
don't
up on
think
Skype?
he's on Skype quite as of yet. So we
Okay.
can go back and we can wrap back around, and we still have some breaking news or some news stories on FreightWaves.com.
Okay.
That we can climb into
Right.
as we wait on Ken to get on the line.
Yeah, so what do we have here? So Canada to truckers, wear a mask when you cross the border is on FreightWaves, right? So
Yes.
Nate Tabak reports truck drivers crossing the Canadian border must wear non-medical masks or face covering under a new rule aimed at curbing the spread of COVID-19. The requirements took effect on Wednesday by the directive from the Public Health Agency of Canada. However, the Canadian Trucking Alliance said it received assurances from the Canadian border service agencies that truck drivers will not be denied entry into Canada for not wearing them, but the officials will make every attempt to give them face masks if they need them, is what they said. So,
Yes, so face masks seems like that's going to be most of our futures.
Yeah.
At least for the next couple of months, or certainly when we open up, we'll probably have a lot of parts of the country, at least, that will require face masks to be out in public. I know New York does, LA does now, and I think that will probably be a growing trend. Another story that we have out right now on FreightWaves.com is COVID-19 is draining the Highway Trust Fund. And this is John Gallagher's article, and it says the Federal Highway Trust Fund is already gasping for air due to declining revenues. It is now getting hit with the case of COVID-19, so that's exacerbating the problem with declining tax revenues for the highway fund. And this is because, of course, fewer vehicles are on the road as a result of the pandemic, and it means less money from fuel taxes. I think we saw somewhere today that new tire sales were down 45% year over year. And, you know, everyone's working remotely. There's less commerce. There's less truck traffic going on everywhere. So that makes sense that fuel consumption's down. Those tax revenues are going to be down. And basically that means less money for infrastructure projects. And I think Ken is ready now. And we'll bring him up on screen here at any second.
There he is.
Good afternoon, gentlemen.
Introduce Ken.
Can't hear him. So we got Ken Sherman, president of IntelliTrans, via Skype, joining us, and we'll let him introduce the company. Tell us a little bit about them. But they've been in business for 30 years or more. And there we go. We got Ken. How are you, sir?
Excellent. Well, good afternoon. How are you?
Doing well, sir. Thanks for coming on the show today. Appreciate it very much.
Appreciate the opportunity. Yeah, so just in terms of who IntelliTrans is, we're a provider of transportation management systems and services primarily to industrial products, in particular bulk and break bulk commodities. So think metals and mining, plastic and chemicals, energy, steels, things like that. We provide, in-transit visibility, transportation management systems, inventory management systems, and then a variety of continuous improvement and execution services for our customers.
Excellent. And you guys have been around for a number of years, 30, I think it is. So
yeah, just about. We were founded in 92, and then I've been here since May of 2003.
Got it. So the description of what you guys are tracking and what your services are, it leads me to believe, and I believe I'm right, is that you guys are looking high upstream in the supply chain. Is that correct?
That's absolutely correct. Most of our customers are relatively far removed, from the consumer. So think someone that's producing a coil of steel that's then sent to a different organization that might cut it down into sheets, who then might sell it to a stamper to make the exterior of an automotive hood that then is assembled, by a tier 1 integrator and then eventually goes to the automotive plant for assembly.
Excellent. So, Ken, what are you guys seeing? What have you seen over this last month and a half with the obvious COVID-19 crisis as far as movement and in the supply chain?
Yeah, so it's interesting, somewhat because of what we were just discussing regarding the removal from the consumer, is that the response in the industry seemed to lag compared to what was happening in, consumer touching industries like travel and leisure and things like that. So through the first quarter, shipment volumes were very strong. But then as we got to literally March 30th or so, we started seeing things drop off to the point where, truck shipments are down depending on which metric you use. If I look at, say, what we saw in week 11 and 12 versus what we saw in weeks 14 and 15, virtually every industrial product segment that we were helping our customers manage was up anywhere from 3 to 10%. When I look at weeks 14 and 15 of 2020 versus weeks 14 and 15 of 2019, those segments are down, anywhere from 9 to 35%. And so the change in the volume, really is unprecedented for anything that I've seen in my 17 years here.
Ken, what industries or what segments have been hit the hardest? You had the range from 9 to 35%. Which industries or sectors have you seen get hit the hardest over the last 15 days?
Yeah, and so it's not going to be surprising to those that follow the general news. Forest products for our guys was probably the least negatively impacted. Think of tissue and toilet paper and paper towels and all the other things that are needed at home, now that people are sheltering in place. Next up would be kind of generic consumer products. So whether it's food and beverage like flour or more consumer goods, that stayed flat longer as people were going to the store and buying a lot more. But we're starting to see that drop a little bit. At the other end, metals was down about 20%, and then building products really got hit the hardest, down about the 35% level.
So with the building products being down 35%, is that a great leading indicator for the sentiment for new construction going forward?
Yeah, so for example, the other day it came out that home builder sentiment had dropped more than it ever had before. It dropped from 72% positive to 30% positive, if I remember the numbers properly. Seeing the shipment counts drop in advance of that number being published, made that number not a surprise to me at all.
Interesting. So as we move through this, Ken, what do you see? Do you have any? Are we near the trough, or do you see it continuing longer? And what do you see as how we ramp back up? How does this come back online?
Yeah, I don't think we've seen the bottom yet, because again we're further back from the consumer. So I expect our shipment volumes through our technology and services to continue to drop a bit over the next few weeks. I think the recovery is going to be, kind of drawn out, because as we start lifting the shelter-in-place rules, and then consumers, and people start getting their jobs back, and they hopefully start spending money again, we're anticipating not seeing kind of volumes ramp back up for probably about 3 months.
Ken, what modes do you guys track at IntelliTrans? Do you guys track barges, for instance?
Yeah, we do a little bit of barge. Mostly what I'm looking at is over-the-road transport and rail transport. And in particular for over-the-road, because of the products we serve, we're skewed more flatbed than other folks. So it was rather interesting that dry van and refrigerated freight saw a spike up to do the replenishment demand when stores had the kind of the surge in demand for products as people were told to shelter in place. Flatbed never really enjoyed that kind of lift in place. And so we're seeing, that being markedly different than dry van or refrigerated freight.
Yeah, I think that's what we've been seeing as well, is that flatbed is markedly different. Do you have any expectations for flatbed drivers to maybe park those flatbeds and pick up a dry van or a reefer at this point in time?
If they could, they would. That's what I would expect, is to be able to try to kind of transition to where there is, more business and higher paying freight. I'm not sure how much the market can absorb there, because as the general market falls, because I expect the dry van and refrigerated freight to rebound some, decrease as that replenishment demand has gone down. And so I'm not sure how hot that will remain relative to flatbed.
So, Ken, this is Mike again, real quick. As we come out of this, people are reevaluating their supply chains, and they had been before that. The tariffs, the trade war makes companies really look at their diversification of sourcing, and from that perspective. Now, COVID as well, COVID-19 has that as, okay, the fragility of your supply chain as well. So where does this go from here? Do you see changes in there, and where does IntelliTrans fit in that?
Yeah, and so as people are looking at how to deal with the changes that are in here, it's all about that resiliency around how much can you reasonably withstand within your supply chain within a short period of time. Because companies historically have said, what if there's a hurricane and stuff gets disrupted, into Houston or things like that. Now where you've got this, much more dramatic change in what's going on, there's going to be some adjustment to it. So if you think about the two things that consumers touch the most, the grocery side, on the coming in, and the waste side coming out, fundamentally about 30% of the demand in those transportation networks have gone from going either from restaurants, or from offices and restaurants, to the home, both for the groceries and for the waste. And so it's going to be really difficult to design a network that can respond to a magnitude of this size. But I think what people are going to do is say, based on what we've learned in terms of what people can do working from home, what were some of the shortfalls we had that we could have lessons learned. I think people will figure out how they can manage their business, more effectively from a distributed workforce versus a centralized workforce. And then all the stuff that we're doing to try to help that is, the technology being, multi-tenant SaaS available from the web anywhere, and then having the freight management services as a component of that, where we can act as an augment to our customers' teams to help them get stuff done. As they end up with more work they can handle to get freight covered during times like this, we can help expand their teams, our team, and help them address that without as much disruption as they might otherwise.
Phenomenal insights. Ken, I have one quick last question for you, and it's from Craig Fuller, who's our CEO here at FreightWaves. And It goes back to barges. And just wondering if they were putting freight on barges due to lack of service times.
Due to lack of service time. So does that mean because they can't get service from the trucks or railroads, or what did he mean by that? Do you know?
I'm not quite sure, but requirements on service times.
Yeah, I think there's lax.
The nice thing with the barge side is if you've got the barges available, they hold, depending on what it is and all of that, say 10 to 20 rail cars worth of product, or 40 to 50 truckloads of product. And so if it's a need to basically distribute inventory into the marketplace and not have to shut down your manufacturing facility because you don't have a truck or a rail car to make the shipment, then we've seen people doing that. Part of what going on with rail not dropping as fast as truck, I think, was exactly that. Let me keep my manufacturing operations running. Let me deploy the inventory as best I can within the storage yards that I have, so that I can continue running and be efficient at my manufacturing yields while preparing to give a rebound.
Good stuff. Excellent insights. Thank you so much for joining us today, Ken. I hope to have you on a future show, as hopefully we're talking about how you're dealing with the massive, incredible V-shaped recovery. Optimistically speaking, obviously. But thank you so much, Ken.
Appreciate the time this afternoon, gentlemen.
Absolutely. Thank you, Ken.
Thanks. Take care.
That's really great information about getting as far upstream as possible and looking at those raw materials, because that is a great leading indicator.
They're tracking it from the ground
exactly
to the manufacturer, which is interesting to look, that far upstream in the supply chain.
It really is. It gives you a great leading indicator for what we'll see in the next 2, 4, 6 weeks coming down the pipe.
Yeah,
you have those drops in raw materials. That means you're going to have drops in freight volumes.
Yeah, I think if you look at that, and they're seeing volumes, and people like IntelliTrans are seeing volumes depressed right now, and they just over the last couple of weeks, right?
The last couple of weeks
saw it, and we're
April
thinking
1st,
well, maybe we're starting to hit the trough. It didn't sound like Ken thought we were at the trough yet.
It did not. It'll be interesting to see where the trough is on this. Our next guest is our editor-at-large, John Kingston, talk about small business loans, and he should be joining us via Skype at any second.
Maybe
not any second. Maybe
Kingston is not ready yet.
He is not. He is ready. Oh, there he is, right there on the screen. Okay, very good. How are you doing today, John?
This is my
Go ahead, John.
Time. Can you hear me?
I can hear you.
Can you
yes,
hear me?
Definitely. Yes, we can hear you.
Okay, good. Well, this is my first time with Skype on for this application. So, anyway,
it's always an adventure, isn't it?
It is. So it's a busy day. Just within the past couple of hours, the Small Business Administration said that it had run out of money in its funds for the Payroll Protection Program, the PPP. They dispersed about $350 billion in just a couple of weeks. Really, it's pretty amazing how fast they did it. They gave about 7% of that to a category called transportation and warehousing. But as of now, they are out of money. Now, there are negotiations going on between the House and the Senate over extending it. I think everybody wants to extend it. The debate right now seems to be over the question of some Democratic requests to add to that, to the next. I don't know if they're talking about another $350 billion. Rather, I think they're talking another $250 billion. So there's debate over that. Right now, the cupboard is empty.
How is the process of applying and receiving loans? I know there were some hiccups at the beginning. Have they straightened some of those flaws out yet?
Well, obviously they've straightened some of the flaws out. They sent $350 billion out the door. And, it's interesting. I put the stories we've written on it. I've been putting in a couple of Facebook groups, and the comments are either, I tried this, I didn't get anything. And then right after that would be a comment of somebody saying, well, it's sitting in my bank account right now. I thought everything was fine. So, it's for a program that got put together so quickly, there are some complexities. I know I sat in on a webinar that was put together by the Truckload Carriers Association a couple of weeks ago, and they spent an inordinate amount of time talking about the question of affiliates. There's a limit of 500 employees to qualify for a PPP. So what if you're an affiliate and you've got 350 employees, but one of your other companies that you're affiliated with has 200 employees? Do you qualify? So these questions are all kind of complicated. The SBA put out new guidance just yesterday on partnerships and how you count the money that flows to the partners and your borrowing base. So, half empty, half full. They've given away a lot of money in a short period of time, but a lot of questions remain to be answered.
Very true. Yeah, definitely. We did have a question earlier in the show from a viewer about crude oil prices, and I saved it just for you, John.
Okay. What can I say? There was an agreement last week between a lot of OPEC countries and a lot of non-OPEC countries, including Saudi Arabia and Russia, the two key antagonists, to slice on a base of about 10 million barrels a day out of the market. Depending on how you count it, how you look at some of the other things. That cut could be 14 million barrels a day, 16 million barrels a day. But let's remember that in April, world demand, world market was about 100 million barrels a day coming into this year. It's going to be down about 25 to 30 million barrels a day in April alone. So you can see that even if every single barrel under this deal that was agreed upon last week was actually taken off the market, you're still way more than the drop in demand. Now that led to a couple of stories that we've written, including one this morning, about people trying to find every nook and cranny that they can buy crude and store it. Because right now you can buy crude now and sell it forward on a commodity exchange, sit on it for 12 months, store it for 12 months, and make pretty good money. The problem, of course, is you got to find some place to put it. So all the sort of traditional storage is pretty much full. They had been looking at they've been talking about putting it on rail cars. You just put it into a 700 barrel tank and put it off on a siding, and we'll come back in a year. And the story that I wrote this morning shows that the economics of that really don't work, and the railroads are really not interested in this.
Very good. And that was from Gary Marks, Vice President of Sales at Universal. That was earlier in the show. We have another comment. You've done a little work on rest areas over the last few weeks and truck stops and kind of the service, being closed down versus opened up. And Les Willis has a comment here. Get your response, John. Wouldn't it be nice if FHWA would get with FMCSA and expand their efforts at the rest areas where food trucks are being allowed to serve the transportation professionals? 30 minutes, breaks at rest areas, 15 minutes, test results. Drivers get his test and meal all at the same time while mitigating interactions with everyone else.
Well, that sounds like a great plan. You test your drivers, you feed them. Let me say something about the food truck. The food truck decision, just a little historical perspective. I used to go in my prior job. I used to go a few times to the meeting of the Society of Independent Gasoline Marketers Association, and I would describe them as really kind of like the big convenience store chains and also the big truck stops. So Love's would be there, TA would be there. They'd have a booth and everything. And the idea of allowing food on the highway, on the interstate highway, as opposed to, right off the exit where most of them are now, was an incredibly contentious issue. The fact is that, there are some interstates where there's food on the highway, but those are these kind of grandfathered places like the Maryland Turnpike, the New York State Thruway or whatever. As we know, in most of the country, on the highway, there's a rest stop with vending machines, but if you want any kind of food or other service, you got to get. And the convenience store industry and the truck stop industry fights tooth and nail any effort to put food on the highway. They always have. They view it as a kind of a existential threat to their business. So I would say this, that the allowing of food trucks into the rest stops, well, certainly I think it makes immense sense. I don't think that this issue is going to go away. I mean, once you've kind of cracked that door and you've allowed that, then what's the argument that you're going to go back? So I think it's going to be very interesting to see the way this plays out. I assure you that the entrenched industries here, the Loves and the TA, Petros of the world, are going to fight like crazy to make sure that whenever you can say this crisis is sort of over, that those food trucks get out of there, go back where you came from.
It's kind of like defending your turf, right? You're defending that parking lot, definitely.
Yeah, there was a in that meeting I used to go to. I used to like my favorite part of it, outside of the fact that there was great food and great drink, but was this sort of 3-hour session about legislative issues. And because they were, convenience stores and truck stops, it was everything from like national energy policy on gasoline down to sales of cigarettes on Indian reservations, all these things that affected that kind of industry. And I can tell you that the discussion got most passionate when they started talking about the idea of allowing a convenience store or something else, on a highway. Boy, it's a red flag for this industry.
And Les agrees with you on that. He says NASO pushes back hard. Thank you so much for your time today, John. It's been a pleasure meeting. Yeah, and you can read all of John Kingston's articles on FreightWaves.com.
Insightful as always.
And entertaining.
Definitely.
and multi-talented, not
Thank
only
you, guys.
oil.
He's a tech guy now.
Nuke is so bad.
Thanks, John. Very good. So that brings us to...
let's end this on a good note.
Yeah,
huh?
on a good note. What's the good note of the day?
Yeah, so here you go. The Seattle-based digital freight network Convoy will pay 100% of trucking costs for food bank donations. A great story by Linda Baker. Taking aim at the food insecurity now facing millions of Americans, Convoy, the Seattle-based digital freight network, on Thursday announced that it will pay the trucking costs for any business in the U.S. wanting to donate a truckload of product to the business's local food bank. Convoy's new program taps into feeding America's network of 200 centralized food banks and 60,000 local soup kitchens and pantries. Participating shippers can reach out to Convoy with a full truckload donation and are matched with a food bank or soup kitchen, usually within 40 miles or less of their facility. Convoy's network then finds, books, and pays a truck driver to deliver the goods to that food bank. So another company stepping up and helping out.
That is really good, especially to food banks, to the people who need it the most, who are basically hanging on with unemployment and also waiting, or hopefully they've gotten their stimulus checks.
Yeah,
so far.
or they're coming soon.
So what do we have up on FreightWaves TV going forward?
Yeah, well,
where do we start?
Let's start with freight forecasting today at 4 o'clock. Yeah, so I'll have Anthony Smith, our lead economist, on. And we'll be talking about data sets and analytics tools. We'll be utilizing SONAR as we always do, but looking at those economic indicators. Right now, there's a lot of things that you can look at on a very tactical basis to see where those opportunities and hurdles are right now. But tracking those economic indicators and what is happening in industry and with the recovery plans and manufacturing and imports, exports, et cetera, is going to be key in figuring out where the trough is and positioning yourself to be in a good position once the recovery starts, whatever that looks like.
You kind of really have to get creative with where you look at leading indicators or indicators outside of freight to kind of pull together a forecast right now, right?
Yeah, you absolutely have to. Port volumes reported way down in March. You can watch that it's been rising dramatically for the since really early March. Actually, it was that large spike. But what is that's coming, and where is it coming from? And then how is it affecting surface transportation? You can see intermodal boxes spiking out of Los Angeles and other port cities into locations. But then what it really comes down to at those locations is the local or what we call city or local and short hauls that are moving, because it's going into warehousing, right? So it's not necessarily going to translate into those longer haul moves for truckload. But so those are tactical things that you're looking at in a different fragmenting of the market. So we'll be looking more at what can you do to say, okay, once we start coming back to work, how are the different markets responding?
Great stuff. Yesterday's lineup, you can still watch the recorded versions on FreightWaves TV or on anywhere you download your podcast. So Apple Podcasts or Spotify or YouTube, Vimeo. And basically, we did Put That Coffee Down, which is the Freight Sales podcast, and we did it all on live demos, sales demos,
yeah, it was a good
using
show.
video to push your sales process further.
Really good show for sales professionals
Very good,
to watch.
yes. So that was at 12 p.m. yesterday. You can catch that on FreightWaves TV. Also, Freightonomics was yesterday, where Anthony and Zach talked about the kickoff to earnings seasons. J.B. Hunt announced, PAM Transportation announced this week too, and we're going to see a flurry of announcements going forward. So they covered that, so check that out. Also with SONAR. With SONAR was yesterday afternoon, where they talked about SONAR and the freight markets, and that was Luke and Kyle.
Yeah. Tomorrow noon, What the Truck?
Tomorrow noon, What the
right?
Truck?
Guests from TriumphPay and across the industry, and we'll wrap up the week in freight. It'll be a great show. Myself and Dooner will be there. And speaking of greatness, FreightWaves Live at Home Agenda is out.
It is out, yes.
Yeah.
Where can they find that?
They can find it on FreightWaves.com. Go to FreightWaves.com, click on events, check out the agenda. It's going to be, dare I say, badass.
It is. It's going to be badass.
It is.
And I forgot about Great Quarter Guys, which we filmed on Tuesday, and it was all about how to how to have a great corporate culture. Great corporate culture while protecting your business if you're a freight brokerage owner or an owner of a small carrier. So check that out as well, and that's on FreightWaves TV. But I believe that wraps it up for this episode of the Coronavirus Freight Market Update. Follow us and check out, stay tuned for Tuesday's our next episode?
Yeah.
Tuesdays
Tuesday
and
noon.
Thursdays at noon on FreightWaves TV.
Got it.